Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. Gold's my favorite metals, gold, silver, and copper, got punished on Friday, and I immediately was writing a report and thought that I should also do a video about it because sometimes when I do these videos and I talk about a written report, I tend to add a little bit to it. So I wanted to do the two-punch combination and do video of the report and also a written report. For viewers watching it on YouTube, you'll be able to find the written portion below in the description. And for those who receive it through my Substack, you'll see it below the video. And normally lately, for some time now, I've been sort of breaking my reporting up into two forms. The written reports are usually where I cover sector reports as well as individual company reports when they become a sponsor. And then I focus the videos on interviews with management of publicly traded companies. And so it has been a while since I did one of these sector reports on the video. So I'm very much looking forward to it. I have a lot to say. So I'm going to do a share screen and bring up this report, and we will be able to talk about it. So as it says here, oh, hold on a second. As it says here, gold punished on Friday, but fear not, as the world is still going through the death spiral of debt that will force a return to the gold standard. In the report, I talk about my current picks as well as new picks in the report. So I'm going to start scrolling down here. And as I mentioned, gold got smacked down on Friday significantly. There were a couple of reasons given for that action, including stronger than expected employment numbers. In addition, there were reports that the Chinese central bank didn't do any gold buying in May. They didn't say anything about the Chinese consumers, who I think are still buying gold very aggressively, as well as other central bankers and other consumers. The the employment numbers are a smoke and mirrors kind of thing. The headline is that the employment numbers were strong and would cause the Fed to hold off lowering interest rates. Beyond the headlines are that full-time jobs are declining, with part-time jobs being the reason for the stronger numbers. Workers are losing their better paying full-time jobs to take on one or two part-time jobs to make ends meet. The government reported jobs numbers do not discern between full-time and part-time jobs. They are considered the same. This does not indicate a strong employment market or economy. Of course, it did give Wall Street traders something to trade on. Gold and stocks, I'm talking about Wall Street stocks, were sold off when the report came out and the US dollar was up. They called this the risk off trade day. To me, it was an overreaction trade on the headline. These things have a way of changing direction quickly, and I believe it will likely be on Monday. Whoops, got a little ahead of myself. Putting additional pressure on gold was that the Chinese central bank didn't buy gold in May. Does this mean they are done? I highly doubt it. They know what they're doing and know this would put pressure on gold, which will likely result in them buying more. The reasons for their buying have not changed. The world is still in a death spiral of debt caused by the free money era after the 2008 global financial crisis. The reasons for the need of the world to return back to the gold standard certainly didn't change on Friday. In fact, earlier in the week, it was reported that the central bankers of the world have more reserves held in gold than the euro. So now gold has become the second most important global reserve. And as you can see here, I picked up a great chart, and it was on Twitter as posted by Kobisi Letter. I'm a big fan of this, and I think you should check them out on Twitter and follow them. I highly recommend their work. So here is the chart of the global international reserves. There's gold, US dollar, sterling, yen, French franc, Deutschmark, euro, renminbi, and others. And as I pointed out, as you can see here, so sorry, I'm going to scroll down a little bit so you can see this a little bit better. As I point out further in the report, you're going to see that back in the left side of this chart, going back to 1900, gold held a very crucial part of the international reserves, peaking out at about 90%. In the 1950s, it came down, but still held a very important role of around 70%. Then in the after the US went off the gold standard, it took a dip, rebounded, took another dip, and then rebounded again into 1980. And during this period, you know, it averaged pretty nicely above 50%. It did drop a little bit below that, but that was fairly short-lived. And then in the mid-1980s, it started a precipitous fall down to, you're seeing here the early 2000s. It did have an increase after the 2008 global financial crisis. It then rolled over again and touched that around little under 10%. And since then, it has been on a very strong move to its current level at about 17%. Ultimately, what I see happening is I believe that gold is going to go back up as an important international reserve. Not only has it recently gone over the euro, I think it will overtake the US dollar and get back above that 50% level. This commentary here basically talks about those trends that I just pointed out. As I said, the current trend certainly looks very bullish and coincides with the death spiral of debt gaining momentum. Not only do I think that the death spiral of debt is a long-term crisis that will only get worse as politicians keep spending at insane levels and the debt servicing costs rise in a frightening way, like in the US, which is on a path to it being $2 trillion just to service the debt. Much of that debt was built up during the free money era, and that debt has to be rolled over into much higher interest rate debt. And that is the mechanism that I believe will cause the US to go over $2 trillion in debt servicing costs. Ultimately, gold is on its way to exceed the US dollar as the dominant reserve currency to over 50%. That's my speculation. Due to the politicians' insane spending and the Fed enabling them printing money like it is going out of style. And it makes me wonder why anybody would want to hold heavily diluted currency, the US dollar in particular, to support the spending with IOUs backed up by nothing. Since the 2008 Great Financial Crisis, the Chinese have been asking themselves why they need to hold so much US debt and currency. So they are selling. I think that's a pretty good answer to what they're asking. Others are doing the same, and who can blame them? The death spiral of debt and money printing on steroids is adding remarkable risk. Buyers of the US debt are likely to drop and become more problematic to the point that the Fed will have to return to being the buyer of last resort. If the international investors go on strike, they won't need to convert their currencies to US dollars in order to buy US debt, putting pressure on both. The other big issue is in the global economy is that the BRICS nations who are reducing their reserves of US dollars and US debt want an alternative to the US dollar being the dominant reserve asset and for international trade. My thesis for speculating that gold will reach $20,000 in the next 10 years is based on seeing the world returning to the gold standard, and that gold plays a more significant role backing up world currencies and debt, while also playing a dominant role in international trade. The backing of the currencies and the debt is the key reason that I think gold will go become 50% or higher of world reserve currencies and become the dominant one again. And another part to that 20,000 story is that it will play become a more dominant role in international trade. Another important thesis in my reports of late is a crucial catalyst I see developing in real time to bring the gold stocks into the gold bull market. Gold is shaping up to average around $300 more per ounce in the second quarter compared to the first quarter. The second quarter will deliver windfall profits for several gold miners. This will come into play when gold miners report or even before their second quarter reports. Many gold miners will receive these windfall profits in the second quarter that will, without a doubt, catch the attention of generalist investors. The gold stocks need new blood chasing them. I certainly believe that chasing is exactly what will happen because as a sector, many gold stocks are coming off very low bases and trading at historically low valuations relative to what they have in the ground. While gold has reached record highs recently, silver is still a long way from its record highs, while copper has also recently reached its record highs. Gold is definitely in a bull market, but to get a sense of how early we are in the trend is to assess confirmation indicators. In a gold bull market, silver always joins the party early in the bull market. The fact that silver is still a long way from its record high indicates that it hasn't confirmed the gold bull market yet. Another key confirmation is the gold stocks. Prior to the PDAC in early March, the gold stocks had been going through a severe bear market for a couple years. Several of the larger gold stocks made multiple year lows prior to the PDAC and then came off their lows. Basically, after being left for dead a few months ago, they have started to improve, but really haven't joined the gold bull market. At most, one can say that some have risen off the canvas. They have a long way to go to be trading in a similar fashion as the bullish action in gold. To have a real gold bull market, silver and gold and the gold stocks also have to join the gold party. The fact that silver and gold stocks are only showing some green shoots of optimism tells me we are still in the very earliest days of the gold bull market. The PDAC this year avoided the PDAC curse. I believe that the 2024 PDAC will be a seminal moment for the gold and the gold stocks. Sorry, I'm doing a little editing here of the report as I go along. After the PDAC, gold made a major breakout, and some of the gold stocks joined the golden party. Just like gold and the gold miners dodged the seasonal trend of the PDAC curse, I also believe they will avoid the sell in May and go away until Labor Day trend. On the contrary, this summer is shaping up to be a very strong trend for gold miners. The real catalyst to bring the gold miners into the gold bull market is when they report their second quarter and see windfall profits for several of them. We only have a few weeks left to end the second quarter. It won't surprise me at all if there is positioning of big money flowing into the gold miners, especially the best in class, well before they report their second quarters. The windfall profits I see coming from the gold miners in the second quarter will make the gold miners hard to ignore by generalist investors. I believe it will prove to be the inflection point that brings a much larger group of generalist investors into the gold miners. When it comes to the generalist investors, the household names in gold stocks are Barrick and Newmont, with Newmont being the largest gold miner and Barrick being number 3. My favorite pick amongst the major gold miners has been and continues to be the number 2 gold miner, Agnico Eagle. While gold is at record highs, both Newmont and Barrick are well below their record highs, while Agnico Eagle has been on a tear that has them within striking distance of their record high. It would not surprise me to see Agnico Eagle hit its record high before they report their second quarter and then go on to make a series of new record highs as gold goes higher. Newmont is lagging mainly because they are digesting the acquisition of Newcrest. It will take a few quarters for the number crunchers to assess if they think it is a good acquisition. In Barrick's last quarterly report, they had lower production and higher costs. While Newmont and Barrick are facing challenges, Agnico Eagle is firing on all cylinders. In their past 2 quarters, they announced record production, record reserves, and record free cash flow. This is why they are leaving their peers in the gold dust and likely continue that trend when they announce their second quarter with gold at much higher prices than they received in the past 2 quarters. This doesn't mean that I think Newmont and Barrick won't benefit from the higher gold price in the second quarter over the first quarter. I firmly believe they will. I just see Agnico Eagle continuing to be the outperformer by a significant margin. Another pick in our reports that has been doing very well and will benefit from higher gold prices in the second quarter is Alamos Gold. They are producing gold at well below the sector average cost of production, while also growing their production profile and bringing costs of production. They are in a sweet spot as a low-cost gold producer that is able to increase production and lower costs. Not many gold miners can say the same. I consider them the current version of Goldcorp. Back in Goldcorp's heyday, they were one of the lowest cost gold miners while producing high-grade gold, which gave them remarkable free cash flow and ultimately made them one of the top performing gold mining stocks. In a bull market for gold stocks, low-cost producers spitting out high free cash flow have a way of being rewarded with very strong performance in their stock action. I see Alamos Gold fitting into that sweet spot as gold stocks enter into the upcoming gold stock bull market. During the transition out of a gold stock bear market like we've seen over the past couple of years, into a gold stock bull market, the high cost producers can benefit in a big way as well. mainly because they go from losing money or making just a little money to making a lot of money. Investors see the rate of growth in their bottom lines and jump in. Not all high-cost producers are created equal. What is important to look for are those doing the work to increase production and bring down costs. In my universe of picks with valuations over Canadian 500 million, McEwen Mining has been a stellar performer while being a high-cost gold miner. The key reasons for this exceptional performance since just before the PDAC in early March, when several gold stocks bottomed and then went on bullish runs, is twofold. They are making headway on their efforts to bring down costs, and they also have a 47% interest in, it's actually slightly above 47%, in private company McEwen Copper, that owns a top 10 undeveloped copper project that also is in the lowest quartile of estimated cost of production amongst undeveloped copper mines. A sign that they are being recognized for their efforts to improve their gold mines is they recently did a private placement to raise money at a 19% premium to the market price on the day they announced the financing. Keep in mind that this is after they had already doubled in price since they bottomed just before the PDAC in early March. The money will be used for exploration drilling at their gold mines. Looking back a little further to the second half of 2022, their stock was around Canadian $4 per share and has recently been over $16 Canadian per share. The reason for this tremendous move is that mining stock investors saw the validation of their interest in McEwen Copper when Newton, a Rio Tinto venture, made 2 investments into McEwen Copper. Plus, Stellantis, one of the world's largest car makers, also made a big investment. This took many by surprise because it was the first time a major car maker invested into a copper project. There is a big trend developing that gold miners and other metals miners are hungry to add copper assets to their portfolio. McEwen Mining has a leg up in this trend with their holding in McEwen Copper, which owns the Los Azules copper project. It is the kind of project both major miners need, as do those that produce products that need a lot of copper. Silvercrest is a smaller version of Alamos Gold. They are a gold and silver miner with low cost of production who are mining high grade and making a lot of free cash flow. They are only a few quarters into full commercial production and have shown that their Las Chispas mine is a great new mine. They came into full commercial production with $100 million in debt and have paid off all their debt and built up a war chest of cash, as well as gold and silver bullion, while buying back stock and paying taxes of $23 million. Due to them sitting on a stockpile of cash and having a free cash flow machine of a mine, they don't really need more cash, so they have been holding on to some of their gold and silver production. I would love to see more gold and silver miners do the same. They're really in a class of their own in that regard. It would help drive gold and silver higher, plus reward their shareholders with receiving higher gold and silver prices while they are increasing in value. For example, over the last 3 quarters, they have been able to sit on their gold production, and in the second quarter, the price of both gold and silver have had significant breakouts. So it has proven to be a very good strategy that I hope more gold and silver miners will jump on board of. Why should they sit on cash when they can sit on gold and silver, which is rising, especially if they don't need more cash? Their performance with their stock appreciating and their bottom line doing so well puts them in a strong position to grow the company. They can look at buying other gold and silver projects that are at cheap valuations, which aren't big enough to move the needle for the major mining companies. This could help them secure future growth. I think they are compelled to act on acquisitions because if they don't, they will be a target. If they buy right, it can help them grow into a much larger mining company, and they have shown they are very good at buying right. I'm going to add a little bit here in that if a company like an Alamos or Silvercrest is taking over others, it is a little challenging for bigger companies to assess how that will go. And so this can fight off the potential for them being acquired. And I would hate to see them get bought out anywhere near their current valuations, because I can see if left alone, they have the chance to become a mid-tier gold and silver mining company. The industry needs more mid-tiers that have exceptional growth profiles and low costs like Alamos. Sorry, I think I'm getting my company like Silvercrest. Not only are they a small version, I even forgot to name them correctly. I'll just do a little bit of an edit here before I move on. Sorry, just get this done in a second. I meant to say Silvercrest. Although I do believe that Alamos is in a similar situation, that if they don't become an acquirer, or the hunter, they could become the hunted. And like Silvercrest, I think they would be better off left alone. I-80 Gold is the final of my picks that are above 500 million Canadian in valuation. They are a sponsor, and I advise you to see the disclosure below. I-80 Gold has only been a public company for a few years. They are the result of Premier Gold being taken over by Equinox for the Greenstone mine in Ontario. Part of the takeover was that all of Premier Gold's Nevada projects were spun out to shareholders to create I-80 Gold. Since going public, they have added key assets for producing gold from their McCoy Cove, Granite Creek, and Ruby Hill projects. They have done extensive drilling to advance those projects and have consistently reported drill results that are all characterized by being high grade with thick intersections. Have a look at their website for news releases with all their drilling hits. It is impressive. During my career in mining, I have never seen a junior miner with 3 world-class projects. When they first started trading, they caught a lot of investor attention, but during the past year or so, they have suffered much like other gold stocks. Strangely enough, part of the reason is because they have an aggressive plan to simultaneously develop 3 world-class projects. In the tough market for gold stocks, skeptics seem to believe the plan is too aggressive and question their ability to pull it off. Some have even suggested they take their foot off the gas. I don't agree with that. I think they should keep driving forward, because this is the kind of thing that can turn them into a much larger company very rapidly in the short time frame, where they're already moving towards test mining on some of their projects. So obviously I don't share that view that they are being too aggressive, because I've seen all the remarkable drill results they have consistently delivered, and recognize how impressive their assets are to help build them into a much larger company. I also have the experience of watching Ewan Downey build 2 companies that were taken over and were big successes for their shareholders. In fact, Premier Gold was taken over for their Greenstone mine, which was built by Equinox. I note that they are also a pick that I will discuss next, and it is going to be one of Canada's largest gold mines. Additionally, I've seen juniors with aggressive plans become miners that went on to big success stories. When you think of it, any junior that wants to become a miner will at some point be considered to have an ambitious growth plan. I mean, Barrick, who is the number 3 and at one time was the number 1 gold miner, they started as a junior mining company that had an aggressive growth plan. I note that earlier I spoke of Agnico Eagle and Alamos. In their early days, they also had ambitious growth plans and had many skeptics who didn't believe they could pull it off. Now Agnico Eagle is the second biggest gold miner in the world, and Alamos is a low-cost producer that is making a lot of money. Nothing has changed concerning my opinion about the potential for growth of i-80 Gold. In fact, my conviction is as strong now as it has ever been. I get that investors don't seem to agree with that optimism now, but I have seen companies with great projects in a tough market turn that kind of situation around rapidly when things get more bullish for gold miners. They have the projects and the production assets to grow into a top 5 miner in Nevada. Plus, they have a team that has built and operated mines for majors in Nevada. Equinox Gold is the most recent addition to the picks and the reports in the group with valuations over Canadian 500 million. I picked them when they announced that they bought the 40% interest they didn't own in the Greenstone mine. When they took over Premier Gold, which I mentioned earlier, that was for a 60% interest in the Greenstone mine. Now they own 100%. Since then, they have started production at the Greenstone mine and are ramping it up to full commercial production. This is a Ross Beatty company who is a serial mining entrepreneur who has had a career of building companies from small producers into much larger companies. He has stated that this is his final company, sort of his swan song, if you will. Their business plan is pretty straightforward. Buy and build mines to create a 1 million ounce gold miner. The Greenstone mine gives Equinox the leg up to move significantly towards that goal. In fact, when Greenstone is in full commercial production, they should be right at that goal. Although they were a miner prior to the Greenstone mine, it is a key project for their production growth. It'll basically double their growth. It puts them in the sweet spot of the Lassonde curve when a company transitions out of the development discount window and puts a project into mine, in this case, the Greenstone mine. This transition has proven to be a rewarding juncture for investors, which I think it will be for Equinox, and why I chose to make them a recent addition to my special situation picks list. Their timing to put the Greenstone mine into production is happening at a time when gold has been performing exceptionally well and is positioned to keep going higher. But there just aren't a lot of new mines, especially ones that will become one of Canada's largest. As I mentioned earlier, I see the catalyst to bring the gold stocks into the gold bull market, and there is a small menu of companies such as Equinox on the cusp of high production growth to choose from. So next, I'll move down the food chain of my picks. Relative to my peers, I have a small list of picks. This is partially by design, as I'm not interested in hunting with a shotgun. I prefer to hunt with a rifle to find a smaller group of picks that can significantly outperform their peers. Another reason is that I try to focus on companies in good jurisdictions with reasonable share structures and outstanding projects. I often hear market commentators in the sector say to stick to good people by mainly only giving you the success signal that they have done it before. And I think there are issues with that recommendation. Often when they have done it before, investors then have to pay a premium. Plus, after being successful, they often aren't as hungry as they were prior to their success. Earlier, I mentioned Ross Beatty. Finding a guy like Ross Beatty that has had so many successes and has stayed hungry is a very rare commodity in the mining space. Additionally, it will cause one to miss out on the ones that have their first success. And let's not forget that these success story guys or people started out with their first success. Sometimes that was their biggest success. I'm more interested in following the roadmap that tells me the people running a company are set up for success. They tend to focus on good jurisdictions, that is where you find great geology, and have the ability to see discoveries turn into mines. They also have reasonable to cheap valuations and put money into drilling to make discoveries and advance them. Finally, and most importantly, they have excellent projects. Finding companies that tick all those boxes is not easy. Below is my current list of companies that range from explorers to small developers that pass through my filters. The first is Goliath Resources. They are about to start their 2024 drilling season and have a fantastic group of targets to drill. Their main one is their Sherbet gold discovery, where they have found a series of stacked gold zones. Most of their drilling has been focused on the zones in the sediments. In 2023, they had a breakthrough when they tagged gold in the volcanics below the sediments. I'm very much looking forward to their drilling into the volcanics below the sediments. I like their chances to find stacked zones of feeder zones in the volcanics. They have stacked zones in the sediments. The volcanics are right below that, and I believe that they will find a series of stacked feeder zones in the volcanics. They also have several other regional targets that show plenty of potential on their large land package in the Golden Triangle of British Columbia. One of the regional targets I'm particularly impressed with is their Treasure Island target. It has a substantial area of outcrop. It's sort of surrounded by glaciers that are receding, and this outcrop has popped up that they sampled and found high-grade copper and gold in a VMS type system. I would add that, you know, one of the great mines in the Golden Triangle was the Eskay Creek mine that was also a VMS type system with high grades of precious and base metals. Drilling at Sherbet has hit widespread gold mineralization with nearly all the holes and a high percentage of visible gold in the hits. This is a clear geological indication that they have a powerful gold mineralizing system that remains open in the sediments and in the volcanics below. It looks to me to be a project with the potential to become a tier 1 gold discovery. This is why they are my highest, these are the reasons why they are my highest conviction gold discovery pick. Borealis Mining is also a sponsor, and I advise you to see disclosure below. Hold on, just get down to Borealis. It is pretty rare that I find a junior with exceptional exploration potential, as well as a path to fast track their project into near-term gold production, especially in a company that, while a private company, was able to raise $15 million Canadian before going public. They were able to do this during a tough market for juniors to raise money. The going public process is time consuming. It's become even more time consuming lately. I have my beliefs of why that is happening, because I think that with so many struggling listed junior mining companies, the exchange and the regulatory bodies are not getting the kind of revenue they used to. So they're going over everything with a fine-tooth comb, which results in more revenue for them. That's a digression there. But they are nearing the point when they expect to be able to get trading soon. I'm looking forward to them going public while gold is making a series of new record highs. Their timing really couldn't be better to launch a new gold-focused company in Nevada. They have a unique combination of an exciting gold project, a strong team leading the company, marquee investors, and going public, well-funded to advance the project during a strong market for gold. What stands out to me from the first time I saw the project is that it has a vast alteration zone of 20 square miles, which is one of the biggest in Nevada. When a gold mineralizing system interacts with the country rock, it chemically alters the country rock. This is very important because big systems leave big footprints, and they have a giant one at their project. It has also seen historical mining, is fully permitted, and has a processing facility built and ready to be turned on. In the not too distant future, I'm going to do another interview with Kelly Malcolm, who is the CEO of the company, and we'll show you some more about that, the processing facility that they have. Plus, it has material on the leach pad and a stockpile of material to process. They have a stellar board of directors that have built mines, operated them, and been taken over, giving their shareholders big wins. In fact, their chairman is Tony McCooch, who ran Kirkland Lake Gold from the time they were a small junior into the takeover at multi-billions of dollars. These people are very good at assessing projects, and it is due to the high quality of their project that attracted their board and managers to the company. Not only do they have a great board, but they've got two key people. One is an expert in resource growth. The other is an expert at building and operating mines. He did this at Detour Lake and at Côté. So they've got all the boxes checked when it comes to people. They also have two wealthy mining legends who made their fortunes investing in mining stocks as key investors. Eric Sprott is one of them. He is a household name in the mining sector. He owns a big chunk of shares. Rob McEwen, who is another marquee mining investor, owns nearly 20% of the company's stock. I've been in the mining business for 3 decades and can say that I have never seen a private company as well prepared to be a success as they transition to being a public company. All right, Kootenay Silver. I'm very bullish on silver, but what I have a hard time doing is finding strong silver exploration companies. Kootenay Silver has one of the best silver discovery stories in silver exploration at their Columba project in Mexico. It reminds me a lot of the early days of Silvercrest Las Chispas discovery that is now one of the best new mines in the gold and silver mining space. Like at Las Chispas, Kootenay Silver is hitting impressive high grade at Columba. Visit their website to see all the holes at Columba, basically because there are far too many to include in this report, but I'm certain you will be impressed with the grades they have reported. They are drilling now and are well cashed up for aggressive drilling. They have a cluster of epithermal veins at Columba. One of the first things you need to find in an epithermal vein system is the boiling zone of the system. Some call that the bonanza grade portion of the system. They have a handle on where that is on the veins they are currently drilling, and it will help them when they go after other veins in the cluster. Basically, when you have a cluster and you know the depth you have to go to hit the boiling zone, that applies to the other epithermal veins in the cluster. So if you like high-grade gold or high-grade silver discoveries with ongoing drilling, Kootenay Silver is a good one for you to check out. Alta Copper is a sponsor, and I advise you to see disclosure below. There aren't nearly enough gold copper projects in the development stages, considering how much copper is needed now and into the future, especially when you consider that the world is depending on a lot of ancient copper mines that are on their deathbeds. The current copper mines are strained to keep up with demands for alternative energy, electric vehicles. They have with struggling power grids that need to be upgraded and power grids needed to be built in the emerging economies. To power up our modern world requires a lot of copper, but the supply chain is ill-prepared to provide enough copper for the demand and is facing near-term supply crunches. The world drastically needs more copper mines in the development stage that can become future copper mines, especially big ones that can last for many years. Alta Copper recently published their optimized preliminary economic assessment, and it shows that their Cañariaco project is what the major copper miners need. I didn't point this out, but they already have a major miner as a 30+% shareholder in the company. Fortescue is the company. Going back to the PEA, it has robust economics based on current prices that will get better. Actually, the prices in the PEA are less than the current price. So it has robust economics based on less than the current price, significantly less than the current price. But it will get better as copper goes higher, which many copper experts predict is what will happen. Another catalyst for the company is drilling. They have not drilled off the Cañariaco Sur and Cañariaco Norte deposits that are right beside each other. I'm looking forward to additional drilling as the known deposits remain open to grow. Next company is Meridian Mining. Meridian is my highest conviction gold copper development company. What initially attracted me to the company was the remarkable numbers they have in their PEA. Since then, they have done plenty of drilling with outstanding results. Most gold copper development projects carry high costs to build a mine, which really need to be developed by major mining companies. Meridian Mining has a project with a cost estimated around $200 million to build, which is within reach of what a junior can develop. It has an extremely high internal rate of return of nearly 60%. Combined with the low capex to build, it can pay back the capex within a year of production. This kind of project is rare in the mining industry. They have done a fantastic job with their drilling. They are currently drilling, so have pending assay results and are cashed up to continue drilling aggressively. Another catalyst is that they are working on a pre-feasibility study to get higher confidence statistics on the project. I can see strong news flow for this company. Hercules Silver. Hercules Silver made an impressive copper porphyry discovery in Idaho during the third quarter of 2023. Then Barrick invested a bunch of money in them shortly after they announced the discovery. This caught a lot of investors and people in the industry by surprise. Barrick is known for being very selective, and investing off the discovery hole was out of the ordinary for them. Then Hercules Silver had to wait through the winter to be able to get back to drilling. Over the past few months, the stock has been basically going sideways. Recently, they started drilling, and due to being well financed, they are able to go at it with an aggressive drilling campaign. The market is awaiting drill results and trying to get a feel from public comments by the company about how things are going. So far, I get the feeling they are still trying to figure out the shape of the system. This is normal. They're less than 10 holes into the exploration of this new porphyry discovery. Takes a little bit of work, folks. I'll be watching closely for the drilling results. If they can follow up with strong drill holes after the discovery, it should be well received as they have a big audience of investors following their story. Nev Gold Corp, they are a sponsor, and please see the disclosure below. I'll show you as we finish the report. Nev Gold hit the ground running once Hercules Silver announced their discovery hole. They staked a key piece of ground in the right geology with historical mining on their Zeus project. There has been a staking rush in the area, and from Hercules Silver's ground all the way to Zeus has been staked by Barrick Gold, or by Barrick. When I looked at the new claim maps, it immediately stood out to me that Barrick didn't go to the north of Hercules. They covered everything in between Hercules down to Nev Gold's Zeus project, which tells me that the key geology is to the south of Hercules all the way to Zeus. I'm also very impressed with Nev Gold's Nutmeg project. It has a resource of around 1.25 million ounces of oxide gold. They feel that the source of the oxide gold is a cluster of epithermal veins below the oxide deposits. This catches my attention because the grades of gold are high for an oxide deposit. And I think the potential of high-grade gold-rich epithermal veins below is very good. I'm looking forward to work they are doing to prepare the Zeus project for drilling and their next drill campaigns at the Nutmeg project. To drill below the oxides. Oops, made a mistake there. Dryden Gold is also a sponsor, and please see the disclosure below. Dryden Gold has been a public company for less than a year. Prior to going public, they secured a large land package near Dryden, Ontario. This is a highly prospective ground. This is highly prospective ground for orogenic gold systems. Drilling on the property before Dryden Gold acquired it had hit extreme high-grade gold. They are really early in the drilling of this project, and most of the drilling has been within the first couple 100 meters of the surface. Orogenic gold systems are well known for having very deep roots that go down several thousands of meters. They have plenty of near the surface targets to test with drilling, which I hope gives them the geological clues of where to go deeper. The most exciting part of exploring an orogenic gold system is the depth potential, which remains wide open. Deep drilling can get costly, so the best way to tackle an orogenic gold system is to use the close to the surface gold mineralization to guide them deeper. The Red Lake area and Dryden are close and share the same geological characteristics. Their geological team had plenty of experience working at the Red Lake mine, where they found a lot of high-grade gold. They are applying all that they learned in Red Lake to lead their exploration efforts in Dryden, Ontario. The field season recently started, and they are doing a bunch of work right now to prepare for their next drilling campaign. We should see a good amount of news from the work that they are doing that will give clues about where they will drill next. Dynasty Gold. Dynasty Gold is also in Dryden, Ontario. They have an exciting project that they have hit high-grade gold in an orogenic gold system. The historical drilling was focused on the near-surface gold and was confined to the first couple hundreds of meters of the surface. They used that information that was done by previous owners to drill just below just below that historical drilling, and that is where they hit the best grades ever on the project. Recently, they put out a news release describing their upcoming drilling campaign. What stood out to me is that they have a solid model of the zone that hit the deeper high-grade gold. They also mentioned they are planning to drill up dip and down dip from the high-grade gold. My hope is that the down dip holes return high grade and it leads them to focus on where to go after the system deeper. They have a QP geologist leading the team. He was formerly the chief geologist for Newcrest, so he has a great history in the business. And while there, he gained tons of experience with underground mining of high-grade gold. He has done a great job with modeling of what Dynasty has already hit, and I like his plans for new holes. I think he will greatly help the company unlock the depth potential of their high-grade gold orogenic system. Sokoman Minerals is a sponsor, and please see the disclosure below. Sokoman has been drilling with fairly shallow drilling into an orogenic gold system called Moosehead in Newfoundland. Recently, I did an interview with their CEO, and we talked about something that is music to my ears. Orogenic gold systems have deep roots that can go down for several thousands of meters. Another characteristic of them is as you get deeper into them, the grades can get very high grade, much higher than near the surface or higher in the system. A sign that they are getting nearer to the heat engine is that as you go deeper, there can be a transition from fine grain visible gold to coarse grain visible gold. They have drilled a lot of shallow holes that have hit fine grain visible gold in several of them, but have probably not drilled deep enough to get the coarse grain visible gold. The music to my ears is when their CEO talked about their plans to go deeper with drilling in our recent interview. They also have the Fleur de Lis project that has all the geological characteristics of an orogenic gold system. In our recent interview, Tim Froud has showed a map that integrates all the prep work on the project that has only seen one hole drilled on it by a previous owner of the project. What immediately stood out to me was that in their sampling, they have several sample locations with gold grains in them. The first question you want to ask is how many of them are pristine gold grains, because this is an indication that they aren't rounded and come from a nearby source. Not only did they find many gold grains in their samples, a high percentage of them were pristine. I'm looking forward to more drilling at Moosehead, especially the deeper drilling. Plus, I'm excited to see what their initial drilling at Fleur de Lis comes across. Okay, the next company is American Eagle Gold. American Eagle has a high-grade copper porphyry discovery in British Columbia that also has very good nearby infrastructure. Management has compared it to having grades and thicknesses that, I better fix that before I move on. I'll just do editing on the fly. Thicknesses that are usually found in South American porphyries. It has caught the attention of Teck as a significant shareholder who is also giving them advice on how to explore the project. British Columbia is well known for having porphyry mines, but they are often much lower grade than the ones found in South America. the NAC discovery truly is hitting the kind of holes that are more consistent with the high-grade South American porphyries. This makes for them having something special in British Columbia, which also benefits from being close to infrastructure. In addition to having hit high-grade copper over thick intersections, they also have an extremely large geophysical anomaly that they have only drilled a small portion of. They are currently drilling, and I'm looking forward to drilling news and core photos. I'm a big fan of this project, which is why I have done some initial interviews and made them an official pick. In fact, this is the exact kind of company that I like to have as a sponsor, because it allows me the opportunities to do a series of interviews as they put out, as the project, sorry, I'm stumbling over my own words because it needs some editing, to do series of interviews as the project evolves. They have been invited, but unfortunately have not taken me up on the offer. I love having sponsors with a project like this, as I can see they will have excellent news flow. They currently have a 15,000 meter drill program underway. I have plenty of confidence they can keep delivering attention-grabbing results, mainly because they have already shown high-grade copper over thick intersections, hundreds of meters in fact. This is a powerful mineralized system, and they tend to get bigger and better as more drilling is done on them. Abitibi Metals. I recently did an interview with their CEO and found their high-grade copper project in Quebec is very impressive. They optioned the project from SOQUEM, a Quebec-based company that is well known for doing exceptional geological work and then bringing in partners to advance them. I love high-grade and copper exploration with great geology and mining-friendly jurisdictions such as Quebec. The province of Quebec is one of the best jurisdictions worldwide for exploration and mining. Let me tell you, this combination is very hard to come by. The initial coverage I did was the interview with their CEO, which was well received by my audience and theirs as well. On the day it was put out, it traded multiples of its average daily volume and was up nicely as well. When I see that kind of reaction, it is clear to me that I can be helpful in getting the word out to an engaged audience of investors. I'm going to turn that down so I don't get interruptions, people calling me. When I see that kind of reaction, it is clear to me that I can be helpful in getting the word out to an engaged audience of investors who follow mineral exploration companies. I immediately invited them to become a sponsor of my reports. Unfortunately, they passed on the offer. It is clear to me that they will be able to keep releasing impressive drill results. Plus, they are well funded for aggressive drilling, so they are in a position to have strong news flow. I'm very happy to make them an official pick in the reports. They have an impressive project in one of the best mining jurisdictions worldwide. They are in the midst of a big drilling campaign and cashed up to keep drilling throughout this year and into 2025. I'm very confident that they have the kind of project that can grow dramatically with the realistic potential to become a future high-grade copper mine. Earth Labs, Inc. Earth Labs has several moving parts that some believe is a little challenging to assess. They were born as a company using artificial intelligence to assist mineral exploration companies. They sold that business to a well-known company in the mineral analysis business, ALS Inc., which is used by many Canadian mineral exploration companies for assaying. I actually have used them myself, so I know they're very good at what they do. quite impressed that they bought an artificial intelligence company to add to their services. They used the funds from that sale to create a company with a three-pronged approach for growth. They own shares in several exploration companies. They also have a royalty division and a group of mining media assets. One of their mining media assets is the Northern Miner, which has been around for many decades and is a well-regarded source of information about the mining sector. Before the internet came along, for many investors in mining, it was the go-to publication for mining. They have evolved to writing about mining, doing interviews about mining, and also being involved as a media partner for mining conferences. They put out a lot of great content that helps investors better understand the mining sector. In fact, I consume a lot of their content because they put out a lot of good stuff. Another mining media asset that I am impressed with is their DigiGeo data. If you've been attending mining conferences as long as I have, you will know this company as the one that would make claim maps around hot mineral exploration plays. They're also evolving into using new technology to enhance their products that will assist investors to do more thorough research on mineral exploration companies. I've heard about some of these changes that they're doing, and it sounds very impressive. I think a lot of people are going to be using their product for doing homework on mineral exploration plays. The key reason that I'm making them a pick is for their prime asset, which is a portfolio of shares in junior exploration companies. In a bull market for gold stocks, the exploration stocks can have a collection of losers and big winners. For many investors these days, they like to invest in funds that hold a group of stocks in a sector. For those kinds of investors, they don't have a lot of options when it comes to junior exploration stocks. To have more big winners than losers, the selection of those stocks need to be well informed. They don't publish their holdings, but I have learned about several of their holdings through their podcast called Crash Labs. I'm impressed with their selection process and team that evaluates the stocks they invest in. One of their significant investments is in a private company that I know very well, Borealis Mining. I talked about them earlier. They're a pick that I wrote about earlier in this report. I believe Borealis Mining is extremely well set up for success as they become a publicly traded company, and they have other key holdings similar to Borealis Mining. One of them is in South America, near where Lundin Mining and their other Lundin companies have been having a lot of success. I'm really interested to learn more about that private company that is going public. Several mining stocks bottomed just before the 2024 PDAC in early March and has since then gained strength. Earth Labs has tracked that trend very nicely, and I see them as a very good proxy for the junior exploration stocks. They give investors that want a basket of well-selected juniors to have exposure to exploration stocks. All right, Arizona Gold and Silver Mining is the last pick, but certainly not the least. Actually wrote quite a bit about them because I like this company a lot. I've been following this company for a while now and was waiting for them to get a key piece of news. They have drilled a series of near-the-surface holes into what looks like an oxide zone with solid grades that has potential of becoming an open-pit mine. That is not what really excites me about their project. They have drilled a small amount of holes below the oxides and hit very high-grade gold in an epithermal vein system. In order for them to go after that depth potential, they needed BLM permits to drill. They got those recently. That was the news I was waiting for. There are a couple key reasons that I like the depth potential over the oxides. One of those is that the oxides need a lot of drilling to show its potential to become an open pit. They are lower grade kinds of systems and put a substantial resource estimate on them, let's say a couple million ounces that can have economics wrapped around them, will take a lot of drilling. First, they would have to put out a resource, which I think it will struggle to have a maiden resource over 1 million ounces of gold. I can find other juniors that already have similar resources drilled and reported. The problem is that juniors that do maiden resource estimates that are predominantly inferred have a way of capping the project in investors' minds. The key reason I am so impressed with the depth potential is the grades they have hit in minimal drilling under the oxides. To understand that potential requires me going into the geology of an epithermal vein system. Don't worry, I won't make it too painful. The drilling they have done below the oxides have hit high grade to bonanza grade gold in the breccia unit. Breccia is a mixture of quartz veins and country rock. Keep in mind that it is the quartz that carries the gold, but you don't get to assay just the quartz. The core that hit the breccia is sent in with the country rock and the quartz vein mixture. For me, this is where things get really exciting. Keep in mind that the quartz is where the gold is, but it gets mixed with the country rock, and the country rock dilutes the gold grade in the quartz. To hit the grades they have in the breccia is remarkable. I look around at a lot of these kind of projects, haven't seen this very often. I understand this kind of geology because I have extensively researched epithermal vein systems. I live in Mexico, which is the most important source of silver anywhere in the world. Most of that silver production has come from epithermal vein mining. One project that I have covered many times in the report is the Las Chispas mine owned by Silvercrest. It is in Mexico and is one of the best free cash flowing gold and silver epithermal veins in the mining sector anywhere in the world. What makes the Arizona gold and silver epithermal vein so impressive to me is a combination. One is the high grades of gold they have hit in the breccias. Secondly, finding gold-rich epithermal veins is not easy. Usually they're high grade in silver, or like Las Chispas, a combination of silver and gold. And it's pretty rare to have just the gold-rich epithermal vein. One of the world famous gold-rich epithermal vein system is the Hishikari mine in Japan. For many years, it was one of the highest grade gold mines in the gold mining sector, and it also had very low costs of production. I'm not saying that they have the next Hishikari, but based on the grades they are hitting in the breccias, I also can't say they don't. To really understand the potential of the epithermal veins will require deeper drilling below the breccias to hit the quartz veins and see what the grades are in the boiling zone, or as some call it, the bonanza grade portion of the system. Now they have the permits to go after the depth potential. I'm very much looking forward to them drilling the depth potential because I clearly understand what they already have found in the breccias. In closing, after gold got the smackdown on Friday, I wanted to write a report because it looked like a little panicky to me for gold and gold stocks. I wanted to put together a report to explain why not only did I think there was no reasons to panic, I also think it created opportunities for level-headed investors. I also wanted to discuss my current picks and new picks. I close off with all the best from myself. And then there is the disclosure. It's pretty long, although I only have 5 sponsors that I talked about in the report. I do own shares in some, and I wanted to disclose all of my biases, if you will. I would add that even though I might be biased in who are sponsors and compared to picks, all of my sponsors and picks have to go through the same filter to become a sponsor or a pick. And I have been in the business 30 years. I've been mentored by some of the best geologists in the business. So not only can you see my disclosure on who my sponsors are, who I own stock in, I put together this legal disclaimer that tells you the gist of what my disclosure is regarding the reporting that I do, and I advise you to take a look at that as well. So let's go back to the start here. I'll quickly scroll up to the start. I guess I could have used the home button, but I didn't, so I'll use it now, actually. My home button's not working, so I'll have to keep scrolling. It's a pretty long report, but I had a lot to say, and I think it's important stuff for my audience, so I'm glad to put it together. And there you go. Gold punished on Friday, but fear not, as the world is still going through the death spiral of debt that will force a return to the gold standard. So again, you saw my disclosures and my disclaimer, and you'll, for those on finding this on Substack, you'll find it below the written report below the video. And if you're following or finding it on YouTube, just look below the video into the description, and you'll find the written report as well. On that note, have a great day, and we will talk to you soon.